Hello everyone, it's me Anil Rai. I'm welcoming you on my channel Max Wealth. Today we are going to, discuss about a very important indicator of technical analysis, that is moving average. This is moving average. Okay, most of you are definitely knowing, but all those who are new and those who don't know the secrets of moving average, we'll be discussing today, and we'll be trying to find out what are the exact ways to trade with the moving averages. Okay, so what is a moving average? Number one, moving average is nothing. So no, these are the prices of the everyday. Moving average is the average price of a given number of period. So now of a given period, like 5 days, okay, or 10 days, or it could be in this way, like 5 candles, okay, 5 previous candles, 10 previous candles, 20 previous candles, okay, 50 previous candles, 200 previous candles. This will be more exact. Why? Because these candles could be of either daily or hourly or 15 minute or 5 minute, 3 minute, or even 1 minute. Okay, it could be weekly also, it could be monthly also. So candles could be anything. Whichever candle you will choose, the indicator will tell you the moving average line of that period, which period you will choose. So we are just going to see how it's turning up and how it's going to give the benefit. How to plot it, number one. So there are many platforms, and most of the platforms are directly giving it here. So we will just check how to plot it in the this trading view, and in other brokers charts will be given directly with a moving average. We'll click here on the indicators, and we will type here moving average or MA just. So it's a moving average updated, moving average exponential. Okay, we will directly click it on moving average, and it's updated, so it calculates both. There are two types of moving averages. Okay, MAs are of two types. One is simple moving average, SMA. The other is exponential moving average. Definitely there is one more, weighted moving average. Okay, but we will use only these two. Okay, what is simple moving average? It's just average of last 10 periods. If it's a 10 period moving average, so it's just simply just calculates total 10 period prices divided by number of 10. And EMA is what? EMA is the exponential moving average. It gives more weightage, okay, more weightage to current price. Okay, we know in our trading history and in the trading fraternity that the current price is definitely more important than the previous one, because current price is going to determine the future. So giving more weightage to the current price is more effective in technical analysis, and that's why we always prefer EMA rather than SMA. Okay, though there would not be much difference between SMA and EMA, but EMA will be a bit quicker response. Okay, EMA gives a quicker response than the SMA because of the weightage given to the current price. Okay, so we'll just check how to plot it. So as we know that we are going to put more importance to the EMA, so we will use it. I will tell you how to plot both. So this is the moving average. Time frame, put it on chart, because whatever time frame you will choose, it will calculate directly. Length, 5 period we can choose. Source will be close always, and method is SMA. Length, leave it just. So it's a 5 period. Now this is a 5 period moving average. Okay, this is the last 5 period average of the 5 previous candles. So it gives like this, and it keeps on going. So that's why it creates a line. Now, if we will try to add one more, okay, here. Now this time I will put 20 period SMA, done. This is a 20 period. Let me just change the color so that we can understand. We can go to style, moving average. We can put it a green color for the 20 period. Fine, it's here. Now there is one more. Let me add it. Okay, paste. Will input, we can put 50 period moving average. Style I will put like pink or something like purple or anything you like. It's depend on you. Okay, so it's like this. Color coding is depending on your own preference. So why use, number one, why use? In the previous sessions we have discussed the price action in the previous, okay, price action. So why use moving average? Moving average, what it does, MA, number one, the first thing, it smoothens the price actions. Okay, it smoothens the price action. PA means it, in other words we can say it cuts the noise and gives average trading price. This is the most important thing. Okay, average trading price at a given time. So this is the most important thing. What it does, it gives an average trading price level at any given period of time. Like here, the 5 period time is average is this, the 20 period is this, the 50 period is this. Now you will ask me that, okay, but what is the significance of 5 or 10 or 20 or 50, 100 or 200? Why to choose these? Why can't we choose 3 or 7 or 25 period or 35 period? There could be anything you can choose. Okay, but why it is, just let me tell you. Which time frame, which period to choose for moving average? Let me tell you one thing. See, in a week, 5, number one is 5 because it's a week's trading days. You know that in 1 week there are 5 trading days. So 5 represents a week's average price. Fine. Just like this, 10 gives 2 weeks, a half of the month of the trading days, average trading price. Okay, average, this gives the trading. Now 20 gives almost 1 month average. Okay, 50 gives almost 3 months of a quarterly average. Okay, and 200 gives almost 1 year, though there is exactly, if you'll say there are 260 approx working days, but if you leave some holidays, in India holidays are more, so it will come around 240 to 250 working trading days. Okay, T days. But for the sake of convenience, we take 200. You can also take 240 or 250, but it looks a bit odd because, see, why we follow the standard? Because most of the traders of the world, they follow 200 period as their standard benchmark. So we also will follow the 200 period benchmark for this for a year. Okay, so 1 year average price. So 5 is a week's average price, 10 is a 2 weeks average price, 20 is 1 month average price almost, 50 is quarterly average price, and 200 is year average price. So this is the thing what we need to know. Now we know that it's a very common sense. What is the importance of average? Okay, if you want, you can read it again and you can understand. Most of you must be understanding why the average price. Average price, if the price, see, if this is the average price and if the price is above the average price, definitely the buying pressure is more. That means the share of the market is bullish. If any particular script or stock or market is below the average price, this is the average price line. If it is below the average price line, it means the selling pressure is more as compared to buying pressure. Okay, we always compare buying pressure with the selling pressure and selling pressure with the buying pressure. So if it is below the average price line, it means the buying pressure is less than the selling pressure, BP, which we call, and its SP is greater than buying pressure. Okay, here BP is greater than SP. So the market is called bearish, means sellers are more. When the sellers are more, price is likely to go down and down. When the buyers are more, prices are likely to go up and up. Okay, so this is why moving average is important to understand the strength of the market. Okay, so it gives us an idea about the strength of the market. Whose hand is strong? The bears are strong or the buyer's hand is strong? Okay, so this gives an idea. Now, how to interpret it? How we will interpret? Now, interpretation. Interpretation, how you can do it? Interpretation will be, see, it's a Nifty 50 chart I'm talking about, and as we know, this is a 5 period, this is a 20 period. Okay, this is a 5 period. This is 5 period. The green was 20 period. This is 50 period. You can plot more as much as you want. Okay, it could be anything. You can plot or 4, 5 or whatever. But I would like to keep it clean. Okay, no much fuss. So you can change it also. I will just show you how to do that also. So interpretation would be, see, we know that if the prices, how to use this interpretation. Here we can see at this point of time, the market is above 50 period moving average. It came down with the 5 period moving average. It came down. It came below the 20 period moving average. This means the monthly average. Okay, but it took support here on a 50 period moving average. That is the almost quarterly average. It took support here and it started moving upward. Here it goes above monthly and weekly averages. So when the price is above quarterly average, above monthly average, and above weekly average, so what is the interpretation? The interpretation is that, yes, somebody is buying, the market is in a buying mode, and it is always better to trade with the trend. So the trend is bullish, so we have to go long here. We will not look for shorting opportunities. Okay, so the interpretation is, if market is bullish, so go for the long trade. Long trades only. Don't try to short the market. Okay, now see what is the result happening. See, it's going up and up, and what a good profit. And you can write it with this 5 period moving average line, and here it took a sudden dip. Okay, as you know that in a price action trend, you can use your previous low as your trailing stop. So here was the stop, here was the stop, and if it breaks the stop, you can get out. Okay, so it could be used in anywhere, or you can use a trailing stop of this 20 period moving line. If it breaks the 20 period, you will sell the stock, and if it goes above it, again you will buy it. So you can trade it at a signal also. It gives us the buying opportunities also. Okay, how? Buying opportunity. You see the market is going up and suddenly it gives a fall and takes a support at 20 period moving average, a monthly, and here is a green candle. Definitely we can take a long trade here with the SL and it will go up and will give you a good profit, decent profit. Okay, so like that only. So now what is happening here? Let me see the other side also. Here it took support, here it taking support. See, market here is coming below the monthly average. If it coming below the monthly average, and now here at this point of time it's below 1 week, it's below weekly, monthly and yearly average price. So you have to only short the market. Market is bearish and you will short the market. Okay, only short trades, no long trades. No long trades in this condition. Okay, so what is happening? You short it here, you can target it here, or you can take a target here, wherever you like. Again it's trying to go up, again it's coming down, so it's a choppy condition here. Again all below all three moving averages, so it's a downtrend. Again here it started moving down, so you can see the latest scenario here. So you will not try to go long when it goes like this, because it could be a choppy or dangerous thing. If it is a clear upside, then only. So what we interpret then, it gives, you see, three things: moving average benefits. Number one, trend identification. Okay, trend identification. If it is above the moving average, it's bullish. Okay, either above the moving average or below the moving average. So above the moving average, bullish. Below the moving average, it's bearish. Here is bearish. Considering this, you can, decide your trade. The second thing is it gives a dynamic support and resistance. It provides us a dynamic support and resistance. See here, you can see it. These lines work as a support or resistance. See here, 20 period moving line, it's taking support from here. Again 50 period is giving support again and again. You can see support here, you can see support here, you can see support, not support here but not here. Now what will happen? If it is a bearish mode, again it will start working as a resistance. So here it tries to go up from here, then again a resistance. Now it's going up here, it trying here, again it's a resistance, and it's coming down. So in a falling mode, these lines work as a resistance. In a rising mode, these lines work as a, bullish market, these lines work as a support. So it provides you the dynamic support and resistance levels, or you can see lines or labels. Okay, now how to interpret? See, the one more thing, the next, it gives the strength. It gives the idea of the trend and the strength of the trend. How it gives the strength of the trend? Slope of moving average. Okay, this is the slope of, if you see the slope of the moving average, see it's a 50 period moving average, it's almost 45 degree. So 45 degree, if it is 45 degree, okay, if it is between plus minus you can say 10 degree, so it's a strong trend, good trend. If the trend is lesser, higher than that degree, see here, I will just tell you. Here it was almost 90-degree fall. What happened? Did it sustain too long? No. In a week or in a year and a half, the market, rises above this previous COVID scenario, and it went up like this. And this trend, if you can see, it's almost 45 to 50 degree, or almost 45 to 50 degree trend. So this trend was more sustainable than this one. Okay, so if the falling is also fall generally happens very fast, but sometimes if the market starts falling, any trend which starts falling or rising with a degree of 45 degree, it will sustain more, or if less than 45 degree, it will sustain for a long time. But if the trend movement is more than 45, or especially more than 60 degrees, okay, then the trend is not going to last for a longer period. It will be a short trend. Now, how we will trade? The next thing is this: how we will trade. Before that, just let me tell you how to plot EMA. Okay, many people may be asking EMA. See here, input. It's input. You go on input SMA, and instead of SMA, you choose EMA, and the job is done. Here again, you go on input SMA. You can choose EMA. The job is done. SMA, choose EMA. The job is done. Now it's EMA line. Okay, or if you want the clear EMA, you can choose one more thing. I'll just delete it. You go on indicator, type EMA. Okay, exponential moving average updated. It will be here. Okay, so it's a same thing. It's not the new thing. You have to choose it here. EMA, the same thing, just only another name, but it's almost the same. So 5. I will do again, copy, I'll paste it, again I'll paste it, and I'll put it here, 20 period, the style will be green, okay, here, 50 period, style will be purple, and done. So this is now EMA. It's same, nothing much change. Okay, but EMA will be more responsive, quicker than the SMA. It works in a intraday time frame also. You can see the 5-minute charts. Now if 5-minute charts is happening, so what is happening? You can see here how it's going like at a support and resistance. Here see these lines work at resistance, is trying to cross it, but is again below, it's trying to cross, again selling. Okay, and in a bullish period it gives a support. So these days Nifty is falling, so it's more like a working more like a resistance. See here, it's coming down, up, resistance, selling, up, then again selling, trying to go up, then again selling, coming down. Okay, so you can identify the trend. Like here, it's trying to move up, so it's taking support here, and then it's going up, then again taking support, then again taking support from here, then again taking support from here, then again taking support from here. So you can see how it's giving a dynamic support and resistance. Now we will see that how to trade with this then. Okay, we'll just how to trade with moving average. How to trade with moving averages. There are two methods. Okay, one is price crossover, and the other is moving average crossover. Okay, this is the thing. We'll just see here. We'll just we'll just choose one stock, say Tata Motors. Many people trade in this, and we'll go on a daily time frame. Okay, this is the daily time frame. I'll remove these trend lines, remove all these trend lines, and here. Now there are two ways you can trade. One, the price crossover. Price crossover means when the price, the candle, when this candle crosses over this 50 period time, see, it depends on you. You have to take the decision whether you will be using 20 period, 20 period moving average, or you will be using 50 period moving average, or you will be using 200 period moving average. It depends on you. Okay, it all depends on you. Why? Because it's your investment or trading decisions. Okay, trading duration. What is your trading duration? If you will be using a short term, you are a short term trader, you will be going for a shorter period. If you're a medium term trader, you will be going for a medium term. If you're a long term trader or long term investor, you will be using 200 period moving average, okay, as your benchmark. So like this only, if where the price is crossing this 50 period moving average, and say you can take an entry here, and you will ride the trend until and unless it breaks below the low of the previous candle. You will use the price action. Okay, it's a bit quick, it's a bit quicker, it's a more profitable. This one will be more profitable, I will tell you. You can use it. The another is moving average crossover, means you will not use, what you will do, you will see that where the 20 period moving average, see you are using 20 and 50 EMA crossover. So here it is crossing again. I'll tell you how to use this crossover also. It is crossing over here because you want the confirmation. Here it is crossing. You will not take entry here. Many people use what they do, the big mistake in moving average crossover. Okay, the mistake in moving average crossover is this, that they say that okay, here it is crossing over, I will take entry here. No, if it is crossing over here, you will see the price has already moved up and start coming down. You will have to wait. You will have to wait for what? Wait for this price to come back at this level, let it settle, and let it start rising again from this level. This is the level where you will take entry with a stop loss of this. Okay, this will be your SL and this will be your entry. Now where you will exit then? If you will use this method, you will keep riding, and here you can see it's not crossing down, so you will keep riding, and oh yeah, it's way up. You can see. So the advantage of crossing is, see, it's not crossing, it crossed below at this point of time. So your entry was around this level, your entry was around 98 or 100, and your exit was around here. Okay, oh sorry, here 328, because here there was no crossover. So you can use this also. It gives you a very long trend. See, price crossover, you will have your entry will be quick and exit will also be quick. Okay, because here the price is crossing below, you will have to exit it here, then again you have to enter it here. So your entry and exit in this method, the price crossover, multiple entry and exit, it will be quick. And this longer trend riding, okay, you will be riding longer trend here, so you don't have to trade enough. You are taking entry at 98, okay, and you are exiting in 328. So it's a big move, you can see here. So these are the benefits. You can go for the short also with the same thing, with the same logic. Sorry, let me just find it out here. See, it's crossing below all the moving averages, cross below here. So you will take a short entry here with this crossover. And if it is coming up here, then fine. Otherwise, you can short it with the stop loss of 175 and see it's going way down till 66. Okay. And when it's crossing back here at 91. So you can decide. It's up to you how you will take the advantage of this. Or you can do what? You can try to mix. It's all upon the experience. You can try to mix a combination method. Combination method of EMA cross and price action. Okay. It's like when all this crossing here, you see the price action. If this is a level, is crossing below, you can take entry here and just keep on riding till it's not crossing the high. So you will mark it here, you will mark it here, and when the market is crossing the high of the period, you can exit it. So this was the high, and again it's closing below. So if the moment it's crossing this high, you can exit it. In the same manner, in the bullish market, what you can do in a bullish market, you can do like this. That it's like this. All the moving averages are up. You ride it here, okay, and you just keep riding, and the moment it is closing, every low is your stop loss, and you keep riding it like this, and the moment it's cutting it here, you will exit. In the same way, you keep riding, you keep riding here. You can either, this was your low, the lower low, the higher low. So every higher low is marked. Okay. You can use it candle on candle. It depends on the, you can use it every candle as your low. The previous candle's low as your stop loss, or the previous swing low. It depends on you are a short term, your scalper, or you are a swing trader, or momentum trader. Okay. Trend trader. Which kind of strategy is yours? Someone is, reversion. Someone reverse traders. There are some reverse traders also. Okay. There are some certain people who take on using this strategy, the reversion, the mean reversion, or you can say, or the reversion, like they try to enter the market when, like here, when this price is very high, very away from this 50 period moving average, and it's turning, you started turning back, they take position here and exit here. Again, what they do when the price is very high and showing this candlestick, signal of selling, so they take short position here, both here. So there are many methods. Okay. They try to identify the far away areas. When the price is far, and it's moving towards MA. So they take trade here, target is here. If the price is here, they take trade here, target is here. They always, their MA is exit point. They don't take entry at the MA, they exit at the moving average. Okay. They will not take trade here. They will take trade here and exit it here. Okay. They will trade here or exit it here. It depends on the strategy. It depends on what kind of trade you are. It depends on your own psychology. So there are many kind of traders. Okay. So these are the ways in which you can use these trading techniques. See, if you want to change the time period, as I said, you can do one thing. You can change it for 20 period. Now it becomes a 20 period moving average. Now this, you can change the 50 period moving average. and now this will become a 200 period moving average, EMA. Okay, so now this is a 200 period moving average, it's a 50 period, and it's a 20 period moving average. Color coding you can do as per your own convenience. A very simple and common thing, when a price, when any share price or market is above all the averages, it's a bullish. When it's below all the averages, it's bearish. There is no rocket science in that. It's a common sense. Okay, and you have to use common sense. In a stock market, I will tell you, common sense gives more profit than complicated strategies. Okay, so you use your common sense more often than the complicated strategy. Avoid complicated strategy, use single. There are various strategies, and you have to find out a simple one. Okay, a simple one which is suitable to your psychology. It's suitable to your trading style. It depends on you. So these are the uses of moving average. These are the secrets of moving average. These are the tricks to use, how to use moving average. Now we have told you how to plot the moving averages, how to use crossovers, how to use crossover for bullish market, crossover or cross under, you can say, for the bearish scenario. And the price action, we combined the price action also with the moving average strategy, which gives quicker response. So hope you like this video. If you like the video, do press the subscription, do subscribe the channel, press the bell icon. Okay, and please like and share so that the others can also get benefited, and we also get motivated to make more and more videos like this, to share the knowledge and to bless you all on the journey prosperity. The stock market is a journey for prosperity. Everyone who is coming to the stock market, whether investor or trader, okay, everybody is on a journey of prosperity. And I wish you a very, very, very heartily that each and everyone who is watching this video and who is trying to win the market and trade in the market will fulfill his or her goal sooner. Okay, and they will become financially independent, financially free, and they will become prosperous. With this wish, I'll take a leave. It's me, Anil Rai, signing off for now. We'll meet in the next video. Till then, have a good